Opening up a company could be the most critical thing that you do in your life. So let's talk about what it means to start a business and the different types of entities that you can form that can be beneficial for you. Number one, sole proprietorship / general partnerships. Number two, limited liability companies. Number three, S-Corps. And number four, C-Corp. Sole proprietorship. Sole proprietors are usually common amongst small business owners that don't have any potential litigation. If you're not in fear of being sued for what you're doing, then you have no reason to have any protection on your business. Insurance might cover it. If you're limited in funds, the next best thing that you should be doing is focusing on how you're going to grow your revenue, not necessarily on the legal aspects of your business. So sole proprietors and general partnerships, when you have more than one sole proprietor, are a good option for that because it allows you to save money on the filing fees, and more importantly, it allows you to focus on your business. Until you reach a certain amount of threshold in revenue, I wouldn't recommend going beyond sole proprietorship on an annual basis unless you're in fear of being sued. Number two, LLCs. LLCs allow the sole proprietor to protect himself and his assets against litigation. Now, I want to qualify this with saying that an LLC is not an end-all be-all. There are scenarios where even if you have an LLC, your LLC and your personal name can potentially be sued. It's not the most perfect entity. However, the LLC does its job, and it allows you to file on a Schedule C as an LLC, gives you the legal protection and the tax advantages that you could have as a sole proprietor. However, if you want even more tax advantage and you'd like to save money from a self-employment standpoint, there could be an argument. Classify yourself as an S-Corp. An S-Corp allows you to save money on the self-employment tax side, but it's really necessary to go through a consultation with an accountant before you make the decision to do an S-Corp. Lastly, a C-Corp. C-Corps have tremendous tax disadvantages. I almost always never recommend C-Corp. However, many do come to me with C-Corps. C-Corps work if you have an extremely high income, you're looking for tax planning, you can use the C-Corp to your advantage when your tax bracket is above the 21% corporate tax rate. However, in almost every other scenario, C-Corps are disadvantaged because you have double taxation on both the profit the C Corp makes and on the distributions that you take out from the C Corp when it's time to cash out. So my recommendation to you is, bottom line, seek an accountant immediately when you're trying to open up a company and make sure that you understand your options of what businesses you should be opening.